Hello everyone, my name is Regina Evangelina Ukim, and I am pleased to present a detailed financial analysis of Shiseido, specifically focusing on their global expansion strategy. This presentation is part of the 4th International Virtual Conference on Education, Social Sciences, and Technology 2024. Shiseido, a brand that needs little introduction, has established itself as a global powerhouse in the beauty industry. With a diverse product range that includes makeup, skincare, hair care, body care, and even fragrances, Shiseido has become a household name in many parts of the world. In 2023, Shiseido was ranked 8th among 10 largest cosmetic companies globally, according to Statista. This is no small feat considering the intense competition in the beauty industry. Expected to reach $79.2 billion by 2027, Shiseido has struggled to maintain its market share. Over recent years, the company has experienced a continuous decline in market share, which is concerning given the industry's overall positive outlook. This decline could be attributed to several factors, including shifts in brand perception, changes in consumer makeup preferences, and the rapid increase of e-commerce, which has altered the traditional retail landscape. Understanding these challenges is crucial as Shiseido navigates its strategy for global expansion. To better understand Shiseido's challenges, we first must consider the broader context of the global industry. The industry has been on a steady growth trajectory, with market value projected to increase from $532.43 billion in 2017 to $805.61 billion by 2023. This growth is fueled by several key markets, including China, the United States, and Japan, which collectively generate around $42.5 billion annually. One of the most significant drivers of this growth is the booming e-commerce sector. By 2027, it is projected that e-commerce will reach 1.2 billion consumers, effectively doubling its current revenue. This shift to online sales has fundamentally changed how beauty products are marketed, sold, and offering both opportunities and challenges for established brands like Shiseido. Consumer demands has also evolved, with a greater emphasis on products that cater to specific skin concerns and a wide range of skin tones. Emerging trends include color analysis for makeup, the growing men's cosmetic market, and culturally specific products like halal and herbal cosmetics. Furthermore, innovation in technology, such as nanotechnology and bioactive ingredients, play a crucial part in product development, allowing companies to offer more personalized and effective beauty solutions. Brand perception, sustainability, and certifications are also becoming increasingly important in influencing purchasing decisions. The COVID-19 pandemic further accelerated the trend towards mindful consumption, with consumers becoming more conscious of the products they use and their impact on the environment. For companies like Shiseido, adapting to these trends is essential for maintaining competitiveness in a rapidly changing market. Now let's take a closer look at Shiseido itself. The company has a rich history that dates back to 1872 when it was founded by Arinobu Fukuhara in Tokyo. Shiseido initially started as Japan's first Western-style pharmacy in the Ginza district, with a mission to provide affordable, effective alternative to the expensive and often counterfeit Western medicines that were prevalent at the time. Shiseido's first major product innovation came out in 1888 when the company introduced Japan's first toothpaste. Although it was more expensive than the traditional tooth powder, the gentle formulation quickly gained popularity, setting the stage for Shiseido's future success. In 1897, Shiseido launched its first skincare product, Ukim, which remains a popular product to this day. The company's progressive and authentic approach, heavily influenced by Arinobu's exposure to Western innovations during his travels, helped Shiseido carve out a unique niche in the market. Under the leadership of Arinobu's son, Shinzo Fukuhara, Shiseido expanded its product offering and established its first laboratory and design team. Shinzo also introduced Miss Shiseido, a promotional campaign that helped popularize the brand nationwide. This initiative, along with innovative products like the rainbow face powder, solidified Shiseido's reputation as a forward-thinking and trend-setting company. Today, Shiseido's product portfolio includes high-quality skincare, makeup, and fragrances. Key brands include Shiseido, known for its products like the Ultimune Power Infusing Concentrate, which won the Prix d'Excellence in 2014. Clé de Peau focuses on luxury skincare and makeup featuring products with premium high ingredients. NARS, a major growth driver, particularly in the US and EMEA regions, with popular products like the Radiant Creamy Concealer gaining traction on platforms like TikTok. Drunk Elephant, renowned for its clean clinical approach, which has also seen significant growth in recent years. Other notable brands in Shiseido's portfolio include Dr. Dennis Gross Skincare and Narciso Rodriguez. To assess Shiseido's financial performance and strategic positioning, I employed several theoretical frameworks that provide a comprehensive view of the company's financial health. These include revenue and profitability trends. This analysis helps us understand how efficiently Shiseido is generating revenue and maintaining profit margins. A decline in profitability, for instance, may indicate inefficiencies in the company's operations or rising costs that are not adequately managed. Liquidity and solvency analysis. Liquidity ratios assess Shiseido's ability to pay off short-term debts, while solvency ratios evaluate its capacity to manage long-term debt. Balancing these two aspects is essential for maintaining financial stability and avoiding the risk of insolvency. Efficiency and productivity ratios. These ratios measure how effectively Shiseido is managing its assets and labor force. For example, low asset turnover ratios may indicate excess inventory or underutilized assets, suggesting a need for better resource allocation or employee training. And lastly, market valuation and share performance. This analysis looks at indicators such as market liquidity and stock performance, which reflect investor confidence and the movement of Shiseido's share price. A consistently rising stock price and high market liquidity generally signal strong future prospects for the company. These frameworks are crucial for understanding the financial dynamics at play and how they impact Shiseido's global expansion strategy. My methodology for this analysis involves a combination of quantitative and qualitative approaches, ensuring a well-rounded evaluation of Shiseido's financial performance and strategic positioning. First is the data collection. The primary sources of data for this analysis include financial reports from 2019 to 2023, annual reports available on Shiseido's corporate website, and industry reports that provide context and comparison. For the analysis, the data was collected, subjected to various forms of analysis, including financial metrics and ratio analysis, which was used to evaluate Shiseido's performance across different regions to identify trends in revenue, profitability, liquidity, and efficiency. Comparison with competitors. Shiseido's performance was benchmarked against key competitors in the beauty industry, such as Coty Inc. and Amore Pacific, to provide context and identify areas where Shiseido excels or lags behind. Examination of the global presence and market penetration, which involves assessing Shiseido's current footprint and the effectiveness of its market strategies for entering and expanding in new markets. Review of Shiseido's expansion strategy. Based on annual and industry reports, I examined Shiseido's approach to global expansion, including its use of partnerships, acquisitions, and direct investments to enter new markets. The findings from the analysis provide a mixed picture of Shiseido's financial performance over the past few years. Profitability ratio. Between 2019 and 2023, Shiseido's profitability was inconsistent with significant fluctuations in sales, gross profit margins, and net profit margin. For example, while sales declined in 2023, the gross profit margin improved in 2021 and 2022, indicating some recovery in profitability after the initial impact of the pandemic. Liquidity and solvency ratios. Shiseido's liquidity and solvency also fluctuated during this period. The current ratio, which measures the company's ability to cover short-term obligations, remained relatively stable but showed a slight decline in 2023. More concerning, however, is the times earned ratio, which experienced a noticeable drop, indicating a potential struggle to meet its interest payments. Despite these challenges, Shiseido managed to reduce its debt position over time, improving its overall solvency. The debt-to-equity ratio, a key indicator of financial leverage, showed a steady decline, suggesting that Shiseido is taking steps to manage its debt more effectively. Efficiency and productivity ratio. Shiseido's asset efficiency improved in 2022 with gains in asset turnover ratios indicating better use of resources. However, the company still faces challenges in optimizing its inventory management, which which has affected its overall efficiency. Employee productivity also showed mixed results, with some improvements in labor efficiency offset by rising costs in certain regions. In terms of market valuation, Shiseido's price-to-earning ratio suggests that the market has some optimism about the company's future growth potential despite the recent financial challenges. The company's market capitalization, which fluctuates with its market price, reflects this mixed investor sentiment. When we compare Shiseido to its competitors, the findings are quite revealing. Coty Inc., for example, has a lower profit margin than Shiseido, but has managed to effectively stabilize its earning thanks to a series of strategic acquisitions and focus on cost management. Amore Pacific, on the other hand, has been more successful in maintaining its market share in Asia, particularly in South Korea, thanks to its deep understanding of local consumer preferences. Shiseido's profit margins are relatively low compared to these competitors, indicating that there is room for improvement. The company's heavy investment in research and development, while necessary for innovation, has put pressure on margins. Furthermore, the company's marketing and promotional expenses have risen as it tries to regain lost market share, particularly in regions like China and North America. In conclusion, the financial analysis reveals that Shiseido has faced significant challenges over the past few years, particularly in maintaining consistent profitability and efficient asset utilization. However, despite these issues, Shiseido remains a strong player in the global beauty industry, with a well-established brand, a diverse product portfolio, and a strategic focus on innovation and sustainability. Shiseido's global expansion strategy is a key element of its long-term growth plan. The company's approach includes leveraging local market preferences, investing in research and development, and utilizing both digital and physical sales channels to reach consumers. By focusing on these areas, Shiseido aims to strengthen its position in key markets and continue its expansion into new regions. While the financial performance has been mixed, Shiseido's commitment to innovation and market expansion suggests that the company is well positioned to overcome these challenges and achieve long-term success. Looking ahead, I have several recommendations for Shiseido to consider as it navigates the next phase of global expansion. First is improve inventory management. Shiseido should continue to optimize its inventory management processes to reduce excess stock and improve asset efficiency. This could involve investing in advanced inventory management systems and adopting lean manufacturing practices. Next is the company should focus on engaging young consumers through social media platforms like Instagram, TikTok, and YouTube. By creating content that resonates with this demographic, Shiseido can build brand loyalty among new generation of consumers. Southeast Asia represents a significant growth opportunity for Shiseido, particularly in countries like Indonesia, Thailand, and Vietnam. The company should consider tailoring its product offerings and marketing strategies to meet the unique needs of consumers in these markets. Lastly, Shiseido should continue to monitor local beauty trends and consumer preferences, particularly in emerging markets. By staying attuned to these trends, Shiseido can develop products that resonate with local consumers and maintain its competitive edge. It's important to acknowledge the limitations of this study. The financial analysis was based on historical data from 2019 to 2023, which may not fully capture the current market dynamics or the impact of the recent global events, such as the COVID-19 pandemic and supply chain disruptions. For future research, I recommend exploring consumer behavior in greater depth to understand how it influences Shiseido's financial performance. Additionally, investigating the potential for brand dissolution as Shiseido expands into new markets could provide valuable insight. Finally, evaluating the impact of different pricing strategies on consumer loyalty and market share would be a worthwhile study area. Thank you all for your time and attention. I hope you found this analysis insightful, and thank you very much.